You know, there's a code to having a successful real estate career. There's actually also a code to having successful real estate transactions. In here, we teach you that code, the Realtor Code. Hi, I'm Mark McInerney, President and CEO of CodeMark Financial. Welcome to Mortgage Money Genius. Today, we're going to teach you everything you need to know inside of non-QM loans, no and low doc non-QM loans. Sit back, relax. 3, 2, 1. Off we go.
I just wanna be your superstar, 'cause it's not where you are, it's where you are.
All right, so last week we talked about stated income inside of non-QM, and if you're joining us today, a quick little recap on what is non-QM. So most real estate agents work inside of the space of what is considered QM loans. QM being qualified mortgages. Qualified mortgages is just a term used over here on this back end, I'll say. And those qualified mortgages are everything that fits under the umbrella of QM, which would be conventional, FHA, VA, USDA, jumbo loans, and the likes. And the reason why these are called qualified mortgages or QM loans is once upon a time when this whole industry imploded back in 07 and 08, they had to come up with a governing body that would hold everybody accountable and that there would actually be some sort of standard or blueprint or box that everybody would fit inside of. Now, as the economy has gotten better, as it certainly has over the last decade plus, people have gotten a little bit more, I should say creative in the way that they offer money. And that has given way to other lenders, considered more like private equity, that offer non-QM loans that say, hey, look, you may not qualify for a conventional loan over here, but you might qualify for a loan over here. So let's have a look. So last week, we talked about stated income loans, and that stated income loans are good loans for self-employed individuals. I'll have you consider that a lot of these loans are going to be for probably your buyers that don't obviously fit the traditional way, and in a lot of cases might be self-employed, because that's usually what hangs people up when they're trying to qualify for a mortgage, well, the traditional way, or the QM or qualified mortgage way. So take a quick look as we recap here. Stated income, we talked about in a lot of cases, 24-month bank statements is what's needed for the purpose of calculating the income. There seem to be quite lenient also in not being too afraid of anybody that might have had a recent bankruptcy, recent foreclosure, of which if you couple both of those, somebody might have a low credit score, and that would be okay inside of this non-QM space. You want to go back and recall what the other little buttons were that we were talking about on here. We had stated income, no and low doc. Then we had investment loans, and then we had loans that were offered for foreign nationals. Today, we're going to talk about no and low doc. So a bit of a hybrid, similar to what you just saw on the stated income. Someone that is in a stated income loan program wants to provide little to nothing, which is hence the word stated, where they will provide maybe one source of documentation. It could be tax returns, it could be 24 months bank statements, and that's kind of it. Now, the difference as to why somebody would go with like a no or low doc, it's a bit of a hybrid of what the stated income was. Like I said, they could offer 24 months bank statements, could also take a tax return, you know, for maybe 1 year. This also is willing to take things and same criteria, such as they will take anybody with a bankruptcy and or foreclosure. We'll just call it 4C. The difference in why somebody might do a no doc versus, let's say, a stated income is the more documentation one can provide, the better the interest rate is going to be. And it's worth noting, in any of these situations, the interest rates are typically going to trend about 1% higher than QM loans. So it's not drastic, all right? And just like in QM loans, there are compensating pieces that are going to award someone the lower interest rate. Going with a low doc loan suggests to the non-QM lender that somebody has a little more paperwork to prove rather than just going with the stated income. I'll just say in very short form here, friends, it's all risk assessment. That's all this is, right? People, I think, forget the idea that what they're looking for is a very big loan, usually $100,000+, and in some cases way more than that. And the bank has to be able to do their due diligence and say, hey, this is what I am willing to lend this money to you for at this rate with this level of documentation. The QM loans used to limit, I should say, really home buyers to having any other option if they were self-employed, because self-employed people usually make a good sum of money but pay very little in taxes. Again, taking advantage of the fact of being self-employed and all the tax deductions that come with it. The non-QM program provides that opportunity for this type of borrower. Again, the low doc is going to be very similar to the stated income, except for the fact that a better interest rate might exist. Now, as of today, we are in 2019, November 2019. Interest rates on this are going to start somewhere around 5.5+%. All right? You'll start seeing that there's a commonality in all of these as we start moving next over to investment loans and flip and fix. Those interest rates tend to be a little bit higher because it's money that is held for a very short period of time. And then also once we get over to foreign national home buyers as well. Take a quick minute just to take a quick look at that. Be right back. What makes this very helpful to understand this is you get to say yes more often. Yes, I can help you purchase this house. Yes, I understand what it means to be pre-approved. Yes, there is a loan program for you. And not that we all want to be yes men, but I tell you what, your business will explode the more yeses you can deliver versus nos. And you got to be in the know in order to understand what is a no versus a yes. Am I losing you here in the words? Don't worry about it. Keep tuning in because you're already watching all of this and you got to be getting some level of understanding now the value of the money, because the deal always chases the money, and so does the clear to close. Welcome to Mortgage Money Genius. Like, share, comment, pass this along to other realtors that also need to become Mortgage Money Genius. Because guys, look, technology is trying to eliminate your job and my job. How do we go after them and beat them? We become a double-edged sword. I'm Art McInerney, President and CEO of CodeMark Financial. See ya.